Welcome everybody, this is the pre-market USA. Stocks are pretty flat, by the way, before the opening bell, half an hour to the opening bell, by the way. So let's have a very quick check what's going on. The S&P 500 is up about 0.09%, the Dow is off about 0.06%, and the Nasdaq is up about 0.26%. So pretty positive performance after a little bit of sell-off on Friday, and mostly negative session for the tech sector and overall for stocks. So we're gonna delve deeper into what's driving the price action and what's actually moving markets today. We have few stocks to watch, but we're going to talk about them a little later, right ahead of the opening bell. But let me first bring to the show my first guest this afternoon, Peter Cardillo, Chief Economist, Spartan Capital Securities. Good morning, Peter, and thank you so much for joining us.
Very happy to be back on your show.
Very happy to have you on the program, Peter. So let's just kick off with a very simple question. What's driving the price action today? We have from one side a post-election rally, which is kind of taking a breather, and on the other side, we have like positive behavior of the tech sector, specifically when it comes to Tesla, which benefited pretty much after the elections.
Yeah, obviously, we have a lot of euphoria in the market, and this is all due to the post-election results. Obviously, President-elect Trump is very pro-business, and of course, the market is convinced that he's going to be successful in perhaps lowering inflation, which remains a very sticky for the U.S. economy. And this euphoria is being translated into a continuation of the bull market that we had during the Biden administration. And of course, you know that the Fed so far have lowered rates, and it looks like we'll get another cut by 25 basis points next month. And then, of course, it all depends whether or not the Trump administration goes ahead in full scale with their economic plan. And of course, the thing to watch is whether or not Trump holds well um, to his rising of tariffs, and of course, that could be a problem in terms of the Fed, because unless there is a scale back in spending, especially in entitlements, the chances of escaping inflation is not going to be that great. And so that probably would mean that the Fed is not likely to continue with lowering rates. And in fact, if inflation were to get too out of hand, they probably would reverse their monetary policy as of today.
In fact, I was wondering, how do you see the coexistence between Donald Trump and Jerome Powell? We know that Donald Trump is not a huge fan of Powell's Fed policy. On the other side, you just mentioned that there might be inflationary pressures as a consequence of Trump's tariffs policies, future policies, by the way. So how do you see the coexistence between the two of them?
Well, I think, Fed Chief Powell was very clear during his last press conference. He was addressed about that, and his answer was very clear: no, no, no. So, I'm really not sure whether or not that it'll turn into a confrontation, and I believe that elect Trump, is not going to want a confrontation this time around, simply because of the fact that that would not be good for the markets. And Trump is not a guy that doesn't like to see the market go down. He wants to see the market continuously go up. So I kind of think that he's going to avoid that confrontation. And then, of course, when the time comes for Fed Chief Powell, when his mandate comes to an end, whether he will be reappointed, that's entirely another question.
Well, I was wondering, what's your assessment on the latest data we saw, 2.6% inflation year over year, which is perfectly in line with expectations, but can we say that inflation is under control at this point, or is still too early?
Look, inflation came down a lot. There's no question about it. Unfortunately, we have sticky inflations. There are certain agricultural products that continue to move higher and that cause a lot of pain to the American consumer. In fact, I think the reason why Trump won the elections was because of the economy, not because the economy is not growing or wasn't growing. The economy in the States is growing at a pretty solid pace. The problem is it's being accompanied by sticky inflation. And when the consumer goes to the supermarket, obviously he's paying more for his purchases, and this is a problem. Uh, Voters always vote in terms of their pocketbook, which is the economy.
And I just wanted to ask you very quickly, what's your take on the bond market, and specifically what's the 10-year Treasury yield indicating on the future Fed policies? And on the other side, we do see very strong dollar index, but kind of slowing down in these past few days. So what's the market indicating for the future Fed policies?
Yeah, I think the bond market is saying two things. Inflation is not going to come down that quickly. There's a possibility that inflation might actually heat up if Mr. Trump should go ahead and impose tariffs that are not accompanied by spending cuts, and that there's a good possibility that the Fed may halt after December. And you can see this morning the 10-year is now at 445, and of course I think 450 is not that far away. If we should breach the 450 from the upside, I think then there's a good possibility that we could retest the highs of a year and a half ago that were close to 5%.
And final take on the dollar index. What do you see, like a stronger dollar, or maybe, let's say, less stronger compared to what we saw in the post-election rally?
Yeah, I think there are two factors for the dollar. One is that the economy is doing well. Second, and probably should be first on the list, is that yields are moving up. And of course, the spread differential between the United States, the Eurozone, and Asia favor the dollar. So, and then there's another technical perspective, which is that the dollar is moving on momentum, and from a technical standpoint, it's very possible that the dollar index could be headed for 110.
Great. Thank you so much. Peter Cardillo, Chief Economist, Spartan Capital Securities. Thank you for joining us, and have a great day.
Thank you for having me.
All right, quick break and stick around. We're going to be back for the opening bell.